Good afternoon or good morning, everyone, depending on what time zone that you're in. My name is Becky Stander, and we're going to get started today for October's webinar, which is going to encounter or talk about uncovering financial data. As a few housekeeping items before we get started, I just wanted to mention everyone that the presentation today for everyone has been placed on mute, and that's just to cut around any potential background noises that might occur. So if you have any questions during today's session, please feel free to use the chat box and chat in any questions, and as they come up or come in, I will be able to answer them. Also, recordings will the session will be recorded, so if you need to access this at a different time or later time, you can always reference back to our website, and we'll be able to grab that recording. So for today's session, what we're going to talk about is uncovering financial data. Now, there's a lot of different material within the financial data that we can grab, but today's aspect is mostly going to filter or focus on our deal module. Now, the deal module is going to be an additional add-on, so it's not sold within just the litigation portion. It's an additional module. So if you don't have any deal content included within your plan, you won't be able to access this material, but it's definitely going to be worthwhile to see what is exactly available in case you did want to eventually add this on. As a sort of a background information of where we're getting our deal content from, we are focusing on two places. One is going to be the Business Law Center, which is located on Westlaw, and anything that's within the BLC Center, we will pull into Monitor Suite and be able to derive some of our charts and graphs from. Another area that we are pulling in our deal data is coming from our sister side of the company of Thomson Reuters, which is Thomson Reuters Finance and Risk. If you have ever heard of any of their products, such as Thomson One, Thomson One Financial, Thomson One Icon, any of those various platforms, that's where we're getting that content from. So we are leveraging our sister side of the company to bring in some of that deal content, which is going to include the following: some registration and prospectuses, mergers and acquisitions, loans, bonds, and private equity. And the private equity section is going to include portfolio companies and investment firms. So that's where we're leveraging a lot of our content from. If you have any additional questions like, well, how far back is it going, or anything like that, please feel free to contact me or one of your business development consultants, and we'll be able to answer that question for you. So what I'm going to go ahead and do is start by sharing my screen. So give me just a second to do that, please. Let me hop back over here. So there's a couple of things I wanted to focus on for uncovering financial data. One, or the first area that we're going to talk about, actually isn't within the deal content, which means anyone that has access to Monitor Suite should be able to access this content. And the first content that I wanted to mention is, of course, the company summaries, which encounters both Hoover's and InvestTech's analysis reports. So I've ran a Wells Fargo Monitor Suite litigation section, and I'm going to click on Company Summary on the left-hand side, and then again click on Wells Fargo, go down to other recent reports, and then we have two reports for both Hoover's and InvestTech's analysis reports. Now, if you have never seen or heard of Hoover's before, that's just going to give you some really nice background information of the company, like what is the company doing, what's their overview, who is running the company, such as officers and directors, what are their key products that they are offering or selling, and a little bit of the financial data. Now, the financial data, or the financial summary, it's going to give you a little bit more of a high-level overview. That is going to have some more material of the sales that was done within the last date that we have, so October 11th. It'll give you the fiscal year end versus if they're doing a year or an accrual year. Plus, it's going to give you some of their 2016 net income and one-year growth. The nice thing about the Hoover's company profile is it is automatically included within your subscription plan, so you don't pay anything extra for it. And if you print out any additional reports or create a link options, this is automatically included, so you don't have to do anything extra for it. The Hoover's report is a third-party product, so as soon as we get the most available or up-to-date changes or any edits with their Hoover's company report, we do make that available for you. So hence, the last report that's ran for Wells Fargo is made available on October 11th, which isn't too bad, right? It's just about a week or a couple of days more behind. The other section I wanted to mention is the InvestTech's analysis reports. Now, the InvestTech's analysis report is also included in your subscription plan, And I have to admit that it is a little buried, which means it's not easily accessible. You kind of have to click in a company summary and then scroll on down. And again, the reason why we can't push that up is just for royalty reasons and royalty sake and trying to keep Monitor Suite at a nice cost level for everyone. So that's why the reason this is kind of buried slightly. But what the Invest Tax Analysis Report is going to do, I'm going to give it a click, and it's going to open up another browser, is that this report is going to give you not just the financial data of the company, but how the financial data is doing on the stock market. So the requirements for this particular report to exist is 1, the company has to be a public company, and 2, the company has to be on a U.S. stock exchange. So we're thinking about NASDAQ or Dow Jones, right? So what this is going to give you is some kind of valuations about the particular company. And this is going to show you how it's doing within the stock market and how it's been trending. Now, you can easily go to a different website or even go to Google ticker, type in the ticker symbol, and kind of get this information for how it's been charting in the stock market. But what this report is eventually going to do, as you can see here, is give you a little bit more of a recommendation about the company of where they see the performance going and where they see the forecast analysis for different type of prices or stock prices. And some of the other reports, not this one, but some of the other reports, they will include some additional information about the officers and directors, maybe of how they're feeling that they're reaching their goals or targets, or if they've had a change of structure or a change of leadership where they feel that they are going within their financial data. So what this is going to do is give you a little bit more information about how they're doing on the stock exchange, give you a little bit more information about the company internally and leadership and where they have their goals going. And obviously, this is actually a pretty important section because if you're looking or you're dealing with a public company, a lot of public companies value their shareholders extremely high. So in order to keep the shareholders happy, in order to keep the stock up and going, it's in order to have the health and success of the company, this report is going to be helpful. So this is going to give you some how the company is doing financially against the stock market, and of course, if they are more successful in the stock market or have a better stock share price, they might be more willing to invest in the company or perhaps take on a merger and acquisition or perhaps have some free capital to do something else with it. And obviously, that's going to be all positives for that company and good financial data to have on hand. This Invest Tax Analysis Report, as you noticed when we clicked on the link, it opened in another browser, isn't necessarily included within your Monitor Suite report if you decide to download the report. So what you want to make sure that you're doing is if you hover your mouse somewhere on the browser, is that you'll be able to either download or print the section. And again, this black line at the top here may switch slightly depending on what browser you're using. I'm using Google Chrome today. So I'm going to go back to the home page here. So that's how the Invest Tax Analysis Reports works out. One other company that I want to run and talk about some of the other deal content is Amazon. And the reason why I'm picking Amazon here is, one, it's obviously a very popular company, and 2, they have been in the news lately talking about different acquisitions in different markets that they want to go into. So everyone should pretty much know about the Whole Foods acquisition, and if you haven't heard it recently, they're going to try to bring into the pharma market and offer some pharmaceutical drug sales. So what we're going to do here within the deal content is we're first going to go into the loan section. Now, the loan section here has a lot of information to unpack, and it does contain a lot of that financial data that will be helpful when you are trying to look for a firm, whether or not if they're being successful or unsuccessful, or whether or not that's going to be lucrative for your firm to go after. My favorite section out of everything within the loan section is the use of proceeds section. What the use of proceeds section is going to do is that it's going to list the reason why a particular company is asking for a loan. So this kind of gives you a look underneath the hood of a company without really asking them, hey, how's your lifeline of the company doing? What are your goals? Are you in trouble? Are you not making your goals? Are you guys looking for investment? What are you guys investing in? This will kind of give you a little bit of that glimpse into it so you can start to make some strategic decisions. How this means for you for financial data is you can look at the reason why they are asking for the loan and start to determine whether or not it's going to be good financial data or they're having some struggles with the company. So for example, if we look at Amazon, obviously the biggest one here is that takeover, which is going to be that Whole Foods deal that happened earlier this year, along with working capital and general purpose. So if I'm looking at this for a takeover, it looks like they took out a $13 million, almost $14 million loan. That is going to be very good news for me because it looks like if I am trying to work with Amazon or I'm trying to represent Amazon, their financial data looks pretty positive, right? No series of banks are not going to lend them money if they feel like they are going to be in trouble, or if they don't think the reason why they want to loan that money is going to be lucrative for the company. So seeing this type of takeover for a loan and the peer value of it means they do have the amount of capital to work with, and it is going to be some good financial data or show positive signs for financial growth. Now, how you can spin this further is, let's say that they ask for a loan for a takeover and the Whole Foods acquisition has not been announced yet in the news. Well, you can take this and say, hey, Amazon is asking for a slightly big loan dealing with the takeover. So if they haven't announced it yet, as a takeover price, this would be a perfect opportunity for my firm to come in and try to work a merger and acquisition transactional piece. They're doing a takeover. Obviously, there's going to be a lot of components to that merger and acquisition. You're going to have to look at the sheer size of the merger and acquisition, along with any secured debts that the acquired company is dealing with, and if it's a retail company or any company that's going to have a lot of employees working with those contracts, benefits, and all those other things. So looking at this use of proceeds section isn't just going to tell you the health and the financial data, but it's also going to tell you where there's potential transactional growth for you to get into. So it kind of gives you a peek there. Now this section for takeover, working capital, and general purpose, there are other sections that are here that will be helpful. So for example, if I would have swapped out my example and would have ran Toys R Us, the top loan hit would have been for a debt in possession or debtor in possession loan. And obviously, if you haven't heard with Toys R Us, they filed that Chapter 13, I believe. Maybe it's I think it's Chapter 13. So what they're doing on this use of proceeds is they took a loan out to cover their debtor or to cover their larger portion of being in debt. So looking at that and looking at the reasons for the proceeds, it's a totally different matter whether or not you want to represent them. If they're taking a loan out to cover their own debt, is that going to be good or is that going to be bad? Are they going to be able to pay their legal bills off? Or if I have a company that's looking to acquire a company that is in trouble and maybe Toys R Us fits with the right work that they're looking for and the right strategy they're looking for, this may be a perfect opportunity to have that merger and acquisition transactional piece come in. So you can look at this and kind of depend the lifeline of the company and get some more financial data to see how much loan material or dollars that they're working with. So we talked about looking at loans. The next sections I definitely wanted to talk about really quickly is going to be from the deal company, deal section, portfolio company, and of course investment firm. So this section for equities, a portfolio company, investment firm, there is a lot of information to unpack here, just a lot. So what I'm going to do is kind of talk about some higher end things that you can do with this for the financial data. If you're looking for more of a deep dive section on the private equities, myself or one of my colleagues would be more than happy to schedule an additional session and go down deep into the woods, or basically the weeds on these sections, because it can be a lot of material to look into. So if we're looking at the portfolio company section, one thing that we're going to take a look here is going to be the investment funds. So what this is going to do is basically, as Amazon is going to be its own portfolio company, where is it investing into? And what this basically means is Amazon is its own investment firm, basically, and they are investing in other startups or other potential companies with either the intention of simply investing in them and making the companies grow, or perhaps they're investing with them with the idea that they want to eventually take them over and basically acquiesce them within the company. This is very common with Amazon, as you can see here. This is also extremely common with Google. So, I'm sorry, not Google, now it's Alphabet Inc. Alphabet Inc. also has their own portfolio company where they are doing investments in those small startups or third-party companies with the eventual idea of trying to take them over. So what does this mean for you for that financial data? Well, one, it means that the company is healthy enough to invest in third-party companies. That's huge because not every company can do that. Well, some other companies are struggling to stay afloat or struggling to invest in their own technology and own third-party processes that they can't actually invest in other companies. And what we can see from here is that while we're only having two that they're looking into, Tiger Mobile Gledia LLC and basically the Standard Chartered private equity firm here, is that this is going to show us the millions that they're investing in. So not only are they a healthy company where they can invest in, but it looks like they are investing significant millions of dollars into these third-party companies. So they have enough capital laying around to invest in different types of companies, which is eventually either meeting their goals or strategic vision or their 5-year plan of how they want to view it. So if they are strong enough or have enough security in their financial data to invest in other companies, obviously that's going to be good financial data for you to go with and figure out how you can spin this. If, for example, they are doing like Tiger Global Management LLC, you can see they're investing at 56, almost 57 million. That is going to be possibly a nice transactional piece to work in the future. They have a lot of money that they're looking into. Perhaps they're looking to just kind of acquire them after they've reached that exit stage. So that obviously would be a perfect opportunity to do an M&A transactional piece. And you want to make sure that you're approaching Amazon saying, hey, I know you might have an exit strategy for a merger. Our firm does mergers too. How about we work together? So not only can you get the financial data off of this, you can start to figure out where there's going to be some additional transactional work here that you can play into this a little bit later. And of course, one other section I want to mention with the funds is going to be the exit or the exit stage. So how portfolio companies basically work, if you're not familiar with it, is they invest within particular companies, as you saw with Tiger Global Media, or Tiger Global Management. At a certain point, they have to exit that investment, right? They either make off their investment back, or they make some kind of profit, or there's a change in management, or they make some kind of turnaround with the company. And at that point, there is an exit stage, and there's a lot of different ways a company can exit from their contract with the portfolio company. In this stage, it is a merger. So what their exit is hey, we're going to invest with you guys, we're going to change your processes, make you a little bit more efficient, and at the end, we're going to exit out of this and just have a merger. So we're basically going to acquire the company that's in. This is also kind of important to figure out and look at the different exit strategies or that the particular company or portfolio company has, simply because strategies are different. It's not always going to be a merger. Second of all, if it is going to be a merger, again, that is a perfect opportunity to leverage yourself for that transactional piece and try to get it in there. And no matter what kind of exit strategy there is, it's always going to involve an additional transactional piece, which is another great opportunity for your firm to sell its transactional component to Amazon or whatever company you're looking at to get more additional work in. All right, the last section I wanted to mention here, again, is investment firm, part of that private equity. Again, there's a lot of material to unpack here, so I'm just kind of going to hit the highlights of where you can get some additional data. Now, as we talked about earlier with the portfolio company, as Amazon being a portfolio company, there are also portfolio companies investing into Amazon. And you can see here with the portfolio companies, you can see the sheer number of portfolio companies that are going to be available. So you can kind of look at this in a different ways, get some more financial material out of it. One, you can look at the sheer number of portfolio companies that are investing in it, with the idea of there are more companies investing in it, there's more companies that agree with the vision, there's more money basically thrown at this particular company to invest or to devolve or to come up with some other strategy material here. You can also take a look at the related financing millions and take a look exactly at how much money each portfolio company is investing in Amazon. Now, obviously, this is going to be in millions, so if you start to add this up, that is quite a bit amount of money that people with portfolio companies are investing in Amazon, which just gives them free capital to do whatever they need to do, either do some investments, do some real estate investments, delete or get rid of some processes that are just old or out of date, and just be more productive with the company. So this can give you some idea of how you can leverage this using this data and using this money to say that they have more free capital to do what they want to do or to reach their vision. You can also take a look at this and see, again, the sheer, not just the sheer size, but the number that they're doing as well. Whether or not it's one portfolio company investing $50 million or you have 5 companies investing maybe $0.37 of $1 million, right? That's also going to give you some ideas as well. The other section within here I wanted to talk about is the investment funds. So we have the portfolio companies that are investing within Amazon, and usually what happens is they invest in a particular product or a particular fund or a particular idea. And you can see within here there's two different ideas that they're investing in, the Alexa fund and then the unspecified fund. If you've ever heard of Amazon and Amazon Echo and Amazon Echo Dot, they have their voice activated system called Alexa. So what this means for the Alexa fund is if I have to take a guess, those portfolio companies did some kind of investment in that particular fund. It looks like Amazon did some kind of development, maybe some technology development, maybe cut down some processes, or just develop another product where Alexa can play into. So where you can do that is saying Amazon has a lot of capital and they are investing in their products. So they're making possibly new products or additional products. And every time you're making a new product or entering a new market or developing it to a new technology, there's always a couple of transactional pieces at play. One, there's a patent transaction piece at play, right? If I'm developing a brand new technology for Alexa, I want to make sure that I have a patent on it. So if your firm does any patent work, this is also a good opportunity to check out the funds and figure out whether or not there's going to be a potential patent filing that your firm can definitely take advantage of. You can also take a look at this and figure out, well, if they're investing in a particular fund and it's already existing, or they're basically investing in some kind of processes or change management systems, there's going to be additional paperwork that might come down the pipeline as well, right? Perhaps they're changing some employment status that's going to lead to some labor and employment transactional uses. Or perhaps they're looking to invest, and when they invest, they have to create a new location, kind of like what Amazon is doing right now. Anytime they're going to do some kind of new business location, that's going to generate just a slew of new transactional work, real property sales, developing some workers contracts, either as a salaried or hourly within a particular area. So there's a lot more transactional uses that you can use off of this and kind of come up with some different ideas. The sheer number of funds here doesn't necessarily mean that the company is being successful or not successful with their technology development or what they're trying to develop into. What I would pay attention more to is going to be the millions here. So they are developing heavily, or they did basically in 2016, into Alexa, looking at almost $28 million worth. So that tells me there's a lot of free capital for them to go ahead and invest whatever technology or processes that they wanted to change, which again leads out to the idea that they are being very healthy and they are financially sound, or they're not working with a lot of debt, or they're not having some kind of problems financially speaking. All right, the very last section, and since we're running a little short on time, I just wanted to mention briefly, I'm going to go back up to the M&A content. With this M&A content, again, is focusing on mergers and acquisitions. What you can do off of this is look at the transaction role of the M&A agreement. So this is going to be, when there is an M&A agreement, is it going to be Amazon as the acquirer, or are they the target? Now, more likely than not, obviously, since you saw with the Whole Foods, they were the acquirer because they acquired, obviously, Whole Foods. So looking at this transaction piece and figuring out where they are, there's some other additional development materials that you can do. If they're looking as a target, as you can see here, perhaps they are doing some kind of targeting where they're spinning off a smaller subsidiary or a small third-party company that they have acquired over the years. What that is going to do for financial data is you can see the value of that particular target, and that's just going to be extra capital that Amazon is going to be able to use in their different spots that they want to invest in, or invest in their technology, or invest in the company. So that gives them more capital to invest in. Perhaps they're doing some kind of buyback or stock program. Maybe they're doing that. That is going to give you some positives with the financial data. This also leads to additional transactional uses. If they are looking to target or spin off a smaller company, that's obviously going to be a merger and acquisition idea for you guys to tackle. And of course, everything that falls in line, talking about property, talking about secure transactions, talking about labor and employment contracts, all those fun stuff that you can deal with. And then, of course, with the acquirer, this is where they're trying to acquire it. That shows you how much free capital they're working with to do that acquisition. So, again, this kind of gives you some lifeline as into the health of the company and figure out where you can kind of develop the overall financial material. So we're about 6 minutes out, trying to keep this very tight. I'm just going to take a brief moment and see if anyone has any questions. All right, doesn't look like there's any questions. I just want to remind everyone that we do have tips and tricks sessions next month. Please be on the lookout for the email coming in your inbox. So we'll give you the invite for this next month's session. I unfortunately don't have the dates yet, but if I had to guess, it would be well before that Thanksgiving date because no one really wants to work on that Thanksgiving week anyway. If you have any questions, please feel free to let me know or let one of my colleagues know. Again, we'll be more than happy to break down that deal content a little further. If you're not dealing with deal content every day, it can be hard to slice and dice and use the data to help grow your firms to either reach your firm's goals or reach your department's goals or either your individual goals. So I'll be more than happy to sit down and explain how each section could help you within the future, whether it's your firm or an individual. Otherwise, I will give you 5 minutes back and have a great afternoon. Thank you for